I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market continued its sharp rebound last week, despite the cratering of major tech stocks. Early in the week, stocks moved up as the UK chaos quieted a bit on the new Prime Minister. And as that relief came, the pound moved up and the euro rallied, and that sent the dollar to the downside and the bonds to the upside, and that brought buyers back into the stock market. Tuesday, there was a big jump as the biggest dogs became the biggest rebounds. And those leaders were Bed Bath & Beyond, Snapchat, Neo, Workhorse, TDoc. Those are stocks that have been absolutely decimated. Yet people are out there looking for bargains, and that's this change in the market environment that we're seeing right now. Wednesday, well, more earnings in the news, and it wasn't good. Microsoft, Google, Boeing, they cratered on earnings. But the economic news was weak. New home sales down almost 11%. Mortgages topped 7%. And the market feasted on the bad news as the bond market moved up. Russell up big and the NASDAQ down big in a very rotational market, which held together on really bad news. Thursday, Meta got crushed as the company moves to obsolescence. Renaming the company and focusing on the metaverse will go down in history as one of the biggest blunders by a CEO. But Zuckerberg, give him little credit, did see that Facebook was failing. And maybe at this point, I'm saying it may not be recoverable. GDP came out a little stronger than expected, but domestic demand was very weak. The bonds again like that, and really needing to get a rebound going, we saw bonds or interest rates fall, bonds move up. And on that Thursday, the stocks were soft and really the weakest day for the week as they were really weighed down by the tech stocks and that Meta news. Friday here, now Amazon down 10%. It was down about 20% overnight on a giant miss. Very weak guidance. They are actually talking about maybe break even for the fourth quarter, which should be their best quarter. And AWS, getting in line with other cloud services, was weaker. And that has been a big source of growth for Amazon, and investors hated that news. Apple, well, it saved the day as it had an earnings beat and the stock exploded to the upside. Now here, up 10% on the day, and that saved the stock market. S&P 500 was down big, and now it is up big. So big gains here on Friday for the stock market. Well, stock market, you'll hardly find another week that so illustrates a rotational market. The FANGs, those techs, they collapsed. And the market is up. Wild. Meta for the week down about 23%. Amazon down 17%. Microsoft down 5.3%, with only Apple putting on a gain, now up about just over 5% on the week. And this shows you how ready the stock market was to rebound as the indexes rose at the same time that the FANG stocks, those techs, collapsed. The Fed is out leaking right now as they see some little indications of the rate increases working, and that has investors seeing over the valley of these big interest rate increases and talking again about pivot. I think they're wrong. But I think that this upward movement will seem that they're correct for a while. And we've been talking about that the fourth quarter would be stronger. The rebound, as our work has suggested, does have a number of weeks to go, we think, on the upside. If the tax this week could not kill the stock market, what will? We saw the XLF, XLV, XLI, that's the financials, healthcare, industrials, they moved up sharply, and they were market leaders as a lot of those stocks had gotten hammered and now are moving up as investors are really looking to two areas. Number one, quality stocks, and number two, some very, very beaten up stocks that may have a rebound. So we think the stock market still has upside for a while, and we're going to show you what our timing and targets are for that a little bit later in the show. Here at midday, S&P 500 up about 2.5% for the week. The NASDAQ now small little gain here on the week, and that's despite the huge cracks in those tech stocks. Russell gains over 4% right now, and that being really helped by interest rates, of course, as those are heavy borrowers and a ton of stocks in there that are in the category of could be in really big trouble, like zombie stocks. And the Dow gains over 4% also, and that came as big gains came in IBM, McDonald's, Apple, and Caterpillar and Amgen. So those big gains in there by those five stocks really have helped the Dow to a big gain. Bond market 30's up about 3 points right now on the week. The 10-year yields, that's the TNX, down 23 basis points. And weakening data is really helping the bond market get the rebound that was late for us, but finally coming. And also UK stabilization, at least for now, is giving some ease to investors. Gold market, gold down about $16. Silver small change, slightly down. And we think that those are going to be stuck in a range for a number of weeks here. The dollar moves down 0.8%. And I think there's more coming. I want you to watch just in a few minutes. We're going to give you our big picture analysis. This is a special report on the dollar, and it's really important because traders, investors are watching the dollar very closely because of its effect on the international companies' earnings. Oil market, it's gaining this week a few dollars. We think maybe it gets to $90 potentially as a best case, maybe not. And we're still looking for $75 or lower early in 2023. For all of our analysis on all of the futures, you really need to watch Future Speak. This is an amazing show put on by Arvi. I do all the analysis on the futures. I hand it to him. He does the review, and then he brings about a 1-hour video showing 24 different symbols, 48 different charts, multiple time frame analysis, and you will never have a better educational and informative video than that one. It is truly beautiful. Avi does an amazing job, so do watch that video, and you can become a level 2 member in the special I'm going to show you in a few minutes to be able to get that video on Wednesday. So that's it for this opening right now. We got great stuff coming up. Katie's going to show you on our cycle low timing tracker analysis on First Solar with a short side opportunity coming and show you some option strategies. I'm going to give you this big picture on the dollar, multiple time frame analysis, and important because of its relationship now to the stock market. I'm going to show you the S&P 500 SPY, and the weakness in the big techs has not changed our analysis, which had turned from extremely negative to temporarily positive. And for level 2, this is our final week right now of this amazing special of massive amount of content and support for traders and investors. And I'll tell you more about that a little bit later in the show also when I give you the information on the stock market. So great show coming up here, and of course tons of things for you to learn and to use in your own trading and investing. Go to askSlim.com and explore, subscribe, and share everything you see with people you know interested in the markets. If you're new, do sign up for that last week here of this level 2 special deal. It's really going to help you see the kind of work that we do if you've never been a member. YouTube, subscribe to that channel, click the notification bell so you know when we put up videos, and do like this video, give it a thumbs up. And on Twitter, follow us at askSlim. Make sure that you do write to Matt at askSlim.com if you have any questions, because he's got all the answers on our memberships and anything that we show you in our huge offerings and education here for traders and investors. All right, this is the cycle low timing tracker where Katie does just beautiful work here, and she's going to show you her multiple time frame analysis on First Solar and a bearish setup, and you will see option strategies using Tastyworks, and we've got some more to tell you about Tastyworks in just a few moments. Show them this, Katie.
Hi, I'm Katie with askSlim. Our cycle low timing tracker today is showing First Solar in this red cycle timing period of risk box. It's in the right-hand column, which references the daily chart. We also find First Solar over here in the green bottom confirmed box for the daily time frame. This means that First Solar has exhibited enough positive price action coming up out of a cycle low to trigger the bottom confirmed algorithm. Now, with positive price action, you might be thinking of a bullish opportunity, but that is not always the case. The colored squares next to the symbols can give you some idea of general conditions. The first square next to a symbol references the intermediate time frame. For First Solar, that box is red, indicating negative conditions with respect to a combination of cycle phasing and momentum conditions on the weekly chart. The second square is for the short-term time frame, and for First Solar, that box is yellow, indicating neutral conditions. Let's go and see what that looks like on the chart. This is a 5-year weekly chart of First Solar. On the bottom, we have two sets of cycle brackets. The solid blue one represents First Solar, and the dashed gold one represents TAN, the solar ETF. These cycle brackets are a drawing tool that helps us to identify money flow patterns. The actual cycles are outlined in black up around the candlesticks, and where those cycles bottomed relative to the ideal cycle brackets is shown with these purple spikes. These vertical blue dashed lines over here on the right show a period of time of a few weeks before and after the ideal cycle low, when we project the current cycle to bottom and begin moving up into the rising phase of a new cycle. We also have a proprietary momentum indicator on this chart. It's called the Reversal Scout, and it's this green and purple ribbon. Green indicates positive momentum and purple negative momentum. Look at these prior cycles and notice how the Reversal Scout turns purple very shortly after a cycle peaks, and turns green very shortly after the cycle bottoms. Currently, we have a negative Reversal Scout. So with negative momentum and coming into the declining phase of the cycle, in addition to the TAN ETF being late in a declining phase, we would not expect First Solar to be able to take out this high. Rather, we would expect rallies to fail. The cycle low timing tracker that I showed at the beginning of the segment indicated that First Solar was in a timing window on the daily chart and was in the bottom confirmed category coming out of that cycle timing. So let's switch over to the daily chart and see what that looks like. These blue vertical dashed lines on the daily chart show you the timing window when we projected the prior cycle to make its low and turn up into the rising phase of the next cycle. And you can see that that is what happened, and the timing and the price action that First Solar has exhibited here are the reasons that First Solar is found on the cycle low timing tracker. Now, I want to point out another feature of cycle analysis here, and it's something called configuration. When a cycle ends higher than where it began, it's a positive configuration, but that is not what happened here. The prior cycle started at this level up here and ended at this level down here. That's a negative configuration. When that happens, the probabilities favor that we won't take out that prior cycle high, but instead fail in the resistance zone, especially when we're in a declining phase on negative momentum on the weekly chart. So right now we are in the top of that resistance zone. And we expect First Solar to struggle in this area. The top of the resistance zone is at 134.25, and we do have a 78.6% fib up at 139.30. Now, I'm recording this on Thursday afternoon, just before the market close, and First Solar has earnings after the close, so anything can happen. However, if First Solar stays in this range, we can look at a short side trade idea in here. Let's go over to the Tastyworks platform and see what might set up. Here are the available expiration cycles for First Solar. We're going to look at the December monthly expiration with 50 days to go as of today, when I'm recording this video. Implied volatility in that cycle is 64.6% with an IV rank of 69.8. Now, that implied volatility and IV rank will likely come down tomorrow after the earnings report. But with elevated IV, we're going to look at short premium strategies. Now, if we do get a huge vol crush after earnings, then we might consider a long premium strategy, something like a diagonal spread perhaps, and we will be following that on the website. For now, let's look at short premium strategies. Again, assuming that First Solar stays in this approximate range for earnings, we could set up a call ratio spread 1/2. If we buy one call at the 140 strike and sell two calls at the 145 strike, our collection is $4.40. That puts our break-even point at $154.40, which is above the current cycle high on the weekly chart. The current cycle high, if you recall, was just above 145. Now, if you wanted to be more aggressive, you could even move those strikes in. Now, this is an undefined risk trade. It uses approximately $1,500 in capital to put this trade on. It has a probability of profit of 88%. We're picking up negative 16.74, so that's short deltas, and a daily theta of about $6.74. This ratio spread has no risk to the downside, and it has a risk to the upside above 154.40. Your max profit on this trade is $940, which is admittedly very difficult to get because First Solar would have to pin the 145 strike at expiration. Now, to turn this into a defined risk trade, you could buy another call further out of the money. That would turn this trade into a broken wing butterfly. You'd want to make sure that you were still able to collect enough. So let's say that we bought one call at the 160 strike. Now our total collection is $1.62. We still have an excellent probability of profit at around 86%. This trade has fewer short deltas, about 6.24, and a daily theta of $1.82. It uses about half the capital to put on this trade, $838, and that is your max loss on the trade as well. Now, again, you can move these strikes closer to the money or further away from the money, depending on how aggressive or conservative you want to be. And of course, these are not the only options trade ideas that would be suitable for the analysis. With our options trade ideas, we often put out an options strategy trade sheet that has a number of other strategies. If you'd like to learn more about our tools and services and to watch us follow our options trade ideas, please visit our website at askSlim.com.
That is great. Absolutely great. Love that work. And I love your illustration on Tastyworks on that platform. And here's more on that. Announcing the askSlim marketing partnership with Tastyworks. Open an account through our site today. I want to take you to our website so that you can see how you can open up a Tastyworks account just by clicking on our own site here at askSlim.com. This is the main page, and there are a couple of ways that you can do it. You can see up here where it says Marketing Partners and Tastyworks, and you can click on that, or you can go to this little arrow here on the carousel, click left one time, and you can see that it brings you to the Tastyworks account opening page. Just a great partnership that we now have with them at askSlim.com with Tastyworks. And click anywhere in here and you'll be able to be taken to the place where you can open an account. Great commissions, cap commissions at $10 maximum per opening leg for listed options, and unbelievable bonuses that you can see here, up to $2,000 for opening an account. It helps us, of course, if you open an account at Tastyworks through askSlim, and of course it helps you through these big savings and using what Forbes says, and we agree, as the best options trading platform out there. You've seen Katie as she has illustrated using this platform, and we're going to do more and more of that going forward. So we wanted you to see that. Please do open an account at Tastyworks today. Get these great commissions and the bonuses for opening an account. Thanks. Investors and traders alike have been focused on the dollar moving up very strongly this year for a few reasons. First of all, the disparity in interest rates between the U.S. and other economies out there in the world, and also a flight to safety bid that's coming in the dollar, and a lot of denominated foreign debt that's in dollars that is causing a big demand for dollars and a dollar shortage. All of that has been helping the dollar move to the upside, and we've been in an inverse correlation with the stock market, and that's mostly about the fact that the international companies suffer from the higher dollar because our goods here are more expensive, the goods over there are much cheaper, so that lowers demand for U.S. goods. It hurts earnings, and add to that the increases in interest rates during that time. That hurts earnings. So all of that puts demand out there for the dollar, and is a reason for the weakness that we see in the stock market, or part of the reason for sure. Let's take a look here. We're going to look at monthly, weekly, and daily charts. Now, historically, the dollar and the stock market can move together for long periods of time, positively correlated. Often we see them both moving up together as the economy is going through a favorable period and people want to be invested in dollar-denominated equities. So that gives you some strength in the dollar, but now it's very different for these reasons that I've mentioned. I want to start out by looking at a very good monthly chart, and I'll look at monthly, weekly, and daily, and you're going to get an idea why I believe that the declining dollar, which we've seen right now, will continue in through December, and that will be supportive to a stock market rebound in through a similar period in towards the end of the year. So this is a really fantastic chart, the monthly cyclical chart on the dollar, the DXY. And this goes back all the way back about 15 years. And you can see the harmonics that are on the bottom. These follow the principle of nominality very closely, 20, 40, and 80 months. That's just coincidental. Most things don't follow that closely to that principle. And you can see in here how there's a big dominant cycle, and you can see the half cycle, is it in there, and the quarter cycles. They really line up incredibly well. And when you get into this period where all three of them are pushing to the upside, you get these big upward spikes. You can see that right there and right over here. Then you get into a corrective period, and that's where we are right over here. Now, if you look at this first quarter cycle right over here in this harmonic family, you could see that pullback on there, but then it moved up to a high. This first one had a sharp pullback right there, and then it moved up and tested the high, and then began to move down again. So right now, what we're looking at in here on this monthly pattern, and I'll give you a little closer look in here, is the probability that there is going to be a correction right over here, and this times out right in towards the end of the year. The supports come in here around 109.5 and down over here around 105. So the daily chart, weekly chart have supports kind of in the middle there, but this says that it's pretty likely that through the end of October here and then November and December, the dollar is going to be under pressure. And then after that's over with and that correction is over with, it moves up again. The question is, will it stop in this same area up around 114, 115, or will it get up to that next level up there, that very key Fibonacci extension at around 119? So that's the question. I would guess it'll come down here, test the highs 114, 115, and then get into that bigger corrective period out in towards the middle of next year. These yellow ovals are where the periods of correction are, the highest periods of risk, and you could see the decline in here and what we're projecting into mid-year out over there. But right now the focus is right here in these next couple of months, and it looks like the dollar will be moving to the downside. Now let's switch over here to the weekly chart, and if the dollar is going to be moving to the downside through the end of the year, then the weekly pattern should line up with that. And this points to right down towards around the middle of December. So you can see the top as it began to form in here. And note this reversal scout. This is the weekly momentum condition indicator that we use on here, and it's just flattening out right over here. I'm expecting this will be turning down in here. Now the supports right over there on the monthly that I showed you is around 108 and something, and here you can see the support right here around 107 something in there. So right now it's 110.5 on dollar, and I would guess that it will be coming down into this area, down into the December time frame to somewhere between 108, 107 right in there. These are the minor supports, as you could see it hit that right over there, and then the monthly support and the weekly support comes right in over here around that 108 number. 108 is a very reasonable target for it to come down here into these next couple of months. Now again, remember, we're talking about a small decline in here based on the size of the rally it had, and then another move in here and get up and test at least that 114 area. That means that the risks for the stock market are likely to pick up a lot out over here because of this inverse correlation. Right now, there'll be some relief, and there's some sense that the language out of the Fed is changing a little bit as they're starting to soften their language in their speeches, and some messaging going on that, you know, maybe interest rates will not be going up as quickly, and maybe they'll get to a level where they pause after December or the first meeting next year, and then probably hold in that area for a long time. But then out of here is when the time where it's going to be obvious that inflation's not giving it up that quickly, and maybe the dollar gets a lot stronger and the stock market goes into another downside break. So that's important to look at also. Let's just look at the daily chart, the short term. This is just phenomenal cyclicality when you look at this. The first thing I want you to look at as we discuss this is that there are harmonics in here that are very clear in these harmonic families. Each time you get a corrective period where both of them are moving to the downside, that's the energetics or money flow pushing down, you get into corrections like you see here and here and right over here. Each of the next rallies you see moved up to a new high here and here. You can see that. This one failed, and that means that this energy is gone that was rallying and moving it up, and then what that says is it moves down through this 110.09 area, that is a breakdown, and that gives you the head and shoulders top that's formed in there. So the head and shoulders top measurement comes in down over here around 107.5. Remember, we talked about 107 to 108 area, and then this cycle in here makes a bottom in the mid-November area, so you get this bounce is very likely to fail and move down again. That means that this period in here is favorable for stocks based on the inverse correlation. Then this gets some kind of a rebound. Stocks probably pull back, and this is the big period of risk. And this is a period right over here where the dollar could fall pretty sharply down to that 107 area, and that's probably going to give stocks a lift late November and into December. That's what we've been looking for, and you can see how this inverse correlation is holding up with all of our other analysis on the stock market. So really wanted to show you this, how we look at the monthly, weekly, and daily cyclical patterns. We understand comparing them what the energetics are, and then we can see what the momentum conditions are. Here, you can see while the slim ribbon was positive, you see that green arrow right there or green arrow right there, and it moves up, it tells you the momentum is strong. The slim ribbon PO, this is a level 4 proprietary study, tells you when momentum conditions are resuming to the upside. You can see that right here and right here and right here, but this time it failed. It went neutral, and look, it turned red right over here. So now we have negative momentum conditions in the dollar on the short term, and that says that this rallies that you have in here, like you're getting an update, you have an update on Thursday of this week, then that is likely to give you following declines after that. You can see in here that our targets in here based on the mid-December sync with the weekly are about 107.40. If there's a downside panic, it could get down to 106.35. That's that 61.8% right over there. So a lot of downward waves in here, as you can see, likely that all lines up with the weekly and with the monthly, and that essentially says that the period between now and sometime in December, we will see the dollar weak, and we will see the inverse, because right now we're getting inverse trading to the stock market. We will see the stock market firm or rise during those periods, and that is a good reason to believe that what our analysis has been on the stock market, which has been a favorable period for the fourth quarter, all within the context of a bear market, that this analysis is supportive of that. If you look a little further out after that December period, the dollar is likely to have another period where it surges to the upside, and that's pretty certain it's going to help the stock market again move to the downside. That is the big picture analysis on the US dollar. I hope you found it incredibly interesting. All right, here is the stock market. 1 to 3 month view of the SPY. And you can become a level 2 member and get the SIR daily snapshot. It's the full analysis on everything I'm going to show you here, but on the S&P 500, NASDAQ, and Russell, cycle analysis, projections, all of our charts, all of our proprietary studies, and more. All of that every single day, and you can get that by becoming a level 2 member, and I'll show you about that in just a moment. But let's go to this SPY chart right here. This chart is the SPY looking back now for about a year and a half. And of course, that's to the low right over here that was made on the pandemic, right down over here in March of 2020. Now, what we see in here was this giant rally where the S&P 500 moved up to its high of about 480 on the SPY. What we have on the bottom are cycle brackets, and these are simply a drawing tool to help us understand the energetic money flow movements in the markets. The actual cycles are these lines up here about how they resolved. So if you look at this cycle right in here, you can see how that was a 27-week cycle approximately, and that's the averages of 27 weeks. Here is the next cycle here, and you can see how they resolved, moving up to the peak here in the everything bubble. We had the bond market bubble as we had ZIRP policy. We had the stock market bubble as the economy and earnings were massively inflated by government Fed actions and massive spending, all of that lifting the stock market to a valuation of about 200% of GDP, historic, and the everything bubble and the ridiculous prices that people were paying for things now moves into the Great Reset phase 1. And that's where we are right in here. Let's follow this cycle low right there, and you could see the vertical lines where these cycles actually bottomed. Remember, these are just average ideal cycles, and where this bottom came right over here was a little bit later than would have been anticipated, but still you can see that below is very clear. So let's take a look at how this top formed right over here and where we are right now. So this cycle right over here should have bottomed right about this area. It was almost perfect. And this cycle finished lower than it began. So you could see here, this cycle, which made a higher high, and this cycle, which made a higher high, formed a left shoulder and a head. And as this rally came right over here and it failed early, that's what's called a left-hand translation, it set up the decline all the way to the bottom of this cycle right over here, which ran about 3 weeks long, and that is well within the principle of variation, normal variations in length. You could see it failed in resistance here, failed in resistance here, failed in resistance here, all of those, and these yellow ovals are where 2 cycles were coming down, giving you the biggest downside risk, and that is out over here, again coming in sometime mid-January through sometime late March or April, where it is expected that the market will have a very sizable decline. This bigger cycle right over here is a 36-week more dominant cycle, and that comes down into that same time frame also. This period here will have 3 cycles moving to the downside. That's all energy of liquidation during that period, and that is set up to give the market a very sizable decline during that period. So you can see that each of these cycles got to a lower low. This one had the market from its peak down 14.4%. This one in the mid-cycle, 24.4. This one, 27.4 on the S&P 500. And we're projecting a 30 to 35% loss in this bear market sometime out in this late winter or early spring period for the market. But where are we now? That's an important question. Let's just look at these cycles right over here. And we had talked about the bottoming coming and the potential for a market rally. Whoops, sorry about that. Out into the fourth quarter. And that is what we are getting now. This rally that we have is getting up to the first resistance levels right there. We thought it could get up to near this level right here at that major 38%. That's about 391. There's a minor resistance here at about 390. So you could see 390, 391 is the beginning of this resistance area. Now, we would expect that it would easily get up here, and this is the bigger cycle pushing on the upside. That is the 400 level or 4,000 on the S&P 500, with this projection up to about 405 in SPY 4050 in the S&P 500, up to that level right there sometime out in January. So we had looked for this to be a favorable period, and it is. There are these minor supports right in here that don't seem to be in play right now, and those are rising as the stock market rises here. So we would look for the stock market to easily get up to this 391 area and maybe through that in the next week or two up to this 400 level on the SPY. And then there's this minor declining period here out into December. So sometime in here, get a peak, maybe in mid-November, late November, come down again into mid-December, and then make this final move up in here into January. I'm following the minor cycle right in here. When I tell you that, I'm giving it strength to the dominant cycle. Now, momentum you can see right over here. When the momentum turned negative right there on the slim ribbon, on the reversal scout, this is our proprietary indicator for our weekly charts and longer. This then moved down and set up this big decline. You can see in here where it turned up, it set up that advance. It is just trying to flatten out here. So this market still has work to do before it does move to the upside. Now you can see in these cycles where it does turn up, like right over here, and that moved you up during that a big advance. Right over here, that's where it only moved up a few more weeks to the left-hand translation. Right over here gave you that big advance. So this needs to turn up pretty soon. Now, the shorter term information that I'm going to share with you right now is really proprietary and available to our level 4 plus members. But I wanted you to see it, level 4 and level 4 plus, and that is our market monitor. So I'm moving that in here right now so you can get an idea of the market conditions. From right to left, this is the most sensitive to the least sensitive right over here. Our reversal scout, our slim ribbon, our option bias indicator, and our market condition indicator. And we talked about in the last couple of weeks with our members that this was shifting to the positive side. And as you can see, the reversal scout for the SPY, QQQ, IWM, Dow Jones, the Dow Jones Transportation, and the FEZ, the European high caps, all positive. You can see right over here, everything but the QQQ turning positive. That is neutral. And of course, we have the QQQ as weaker. Our option bias indicator has a lot of neutrals in here, and this is leaning more towards the weekly conditions, though you can see that the European is already turned positive. And this is the market condition indicator, which when it gets under minus 25, it then gives you a very negative signal. And then when it gets up between minus 25 and plus 25, it gets into the swing zone, and it has to get above plus 25 to turn green. And you can see in here, because this has longer term indicators in there, that it is not turning yet, and it may not be able to get really good, strong upside indications during this period over here in the market. But as these things began to turn, of course, our members that have this were able to see that, and that's important information to be able to see how the momentum conditions are changing. And the reversal scout gave those first indications, and that would have been on the shorter term daily charts. So what we see now is an improving momentum condition overall on the shorter term, and not quite yet over here, and that has work to do, which we think it will be able to do, and then turn up in here for a while, because as we said, we don't think the top in the stock market comes until sometime late December to mid-January, and then probably mid-January. Late December probably is too soon. And then getting into this very risky period where we think that there will be a very serious decline, where the stock market likely will give up from 400 or in that area down to below this area right over here, which was that last low on that important major 50% fib at 350, probably getting down here to about 320 in that period. So this is a 1 to 3 month view, yet I'm taking it a little bit further, 4 or 5 months, because these are really important areas right over here. This is normally things that we would share with our members, of course, going out that far because it's a little bit bigger picture, but we're getting in an important time frame now, and I want you to want to be an askSlim member. So I'm giving you more and showing you more so you could see the value of the great things that we bring. And you can have, as I said, all of our analysis, full analysis on SPX, NDX, the Russell, cycle analysis, projections, studies, everything, and be able to get that every single day. Matt does an unbelievable job on that. And I want you to sign up right now if you've never been a member. This is the final week for our level 2 trial, special 50% discount. You're going to get everything on this page for just $29.50, and it's non-recurring. We're going to give you a month to look at it, and that includes, if you want to go through more than 600 videos in our video library. It's incredible in 10 categories. That I know you will never get through that in a month, but the evergreen videos in there, which are more than 300 in that video library on tools for text or trader psychology or style, strategy, and plan, things that traders and investors really need. You'll spend forever on there watching that. So stock index report live stream. This is a live look at the S&P 500, NASDAQ, and Russell with 15-minute charts and the important resistance levels, support levels, and acceleration zones so you can catch those bigger trades. Fantastic. You'll get the daily stock index report, enhanced snapshot on all of the indexes, and be able to see all of our analysis. You'll get our live chart streams on the S&P 500 with multiple time frame analysis and those proprietary studies I just talked about. You'll get the stock market weekly ETF review, our Slimulator momentum tracker with over 1,000 symbols on there, and that's for investors and position traders with our built-in algos. Future Speak show on Wednesday, 24 different futures and indexes, weekly and daily charts. Arvi does a brilliant job on that. You'll get a complete video library, our workbench with all the trade planning support that we give, and Discord access to see what our analysts are talking about live. Just unbelievable. It's too much to show you all here. I want you to go make sure you take a peek at all of the videos that we offer in that library. You'll get a good idea and everything that we have here. Go to the top of the askSlim page. Click that Learn More button, and it will give you great illustrations of everything that we're talking about here for $29.50 non-recurring. This is not going to recur. That's what it means. You're going to have to decide whether you want to stay after that or it's just going to expire. You don't have to do anything. Sign up right now for $29.50. Any questions, write to Matt at askSlim.com. Just fantastic information for you. That's everything that we're going to talk about right now. I want you to make sure that you do go to the askSlim site and do sign up for that level 2 special. On YouTube, subscribe, click that bell so you know it when we put things up, like this video, and watch our member videos in the playlists and past shows. On Twitter, follow us at askSlim, and any questions you have, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit and